Hello and welcome to the Mutual Fund Show on Business Today TV. I'm Sakshi Batra and joining me on this show is Shail and Bhatnagar, editor of markets on Business Today TV. Welcome Shail and thank you so much for taking the time out for this
My
discussion.
pleasure, sir.
Now last week we've already discussed two major categories of funds. One is the flexi cap and the other was the large and mid cap funds in our previous shows. Now today our focus is solely on the mid cap funds. So first up, if you could help all our viewers understand what exactly are mid cap funds and why does it really make sense for investors to have mid cap funds in their portfolio?
Yes, actually, thank you for having me over. Let's get down to the real basics of mid-cap funds. As you would well imagine, and it's a fact globally that it's the mid-cap companies across the world that actually power economies like the ones in the US, like the ones in China, in Europe, and all economic powerhouses that you've seen over the last 500 years. And India is no exception. Therefore, mid caps, both in terms of funds as also in terms of individual stocks, should be a very decent chunk of your overall portfolio, be it in equity funds or in the overall stock space. Therefore, we see mid caps, coming into focus, and the fact that India is home to about 13 million MSMEs and some of the most brilliant minds, some of the most innovative companies are listed in this space. And the fact is that every single blue chip, Sakshi, was
Yeah.
once a mid cap.
Yeah, that's very true. That's very true. So, Shail, if you could help us with the kind of returns also, what the mid-cap funds have given, so that they get an idea as to compare to the blue chip funds, what are the kind of returns mid-cap funds have really given?
Okay, Sakshi, let's begin with the basics. Since we are sitting in July,
Yeah.
this is the best time to gauge the year to date performance of top quality mid cap mutual funds, as also their benchmark and the sector average. We've been discussing these points over the last week as well. And between 31st of December and 30th of June, the Nifty rose about 6%, but the mid cap index was 15.4% higher in the past 6 months. So you can see how wonderfully well, about two and a half times, the mid cap index has outperformed the Nifty, and the sector average is also not behind 12.3%. It's underperformed the mid cap index, but it's 2x the Nifty. You can also see how the broader American markets have performed. Of course, they've been a tad higher than our domestic markets. But since this is a program considering mid cap funds, we'll stick to that. See, because the company is small, it faces a lot of odds, and the sector is often buffeted by unpredictable turn of events. For instance, during the COVID pandemic, the mid cap index fell far lower and far sharper than the Nifty, simply because these companies do not have that kind of a bandwidth to deal with unforeseen events, as also with the normal life cycle. Therefore, the returns are unpredictable, and this sector is riskier. Because this sector is riskier, the returns are higher when compared to the average. Therefore, while these funds should be a part of your basic portfolio, but investors should understand that over a period of time is only that you will make returns. We generally say that 3 to 5 years is what your investment horizon should be. But in the case of mid cap funds, Sakshi, it would make definite sense to have an investment horizon of more than 7 years, simply because the unpredictability over a period of time harmonizes, and therefore you start see stellar return. Something like 2.5x, 2x Nifty, even 1.75x Nifty. So if Nifty is compounding at 11, 12, 13% a year over the next 10 years, these funds will compound somewhere like 17, 18, 20% CAGR over the longer term, which is more than 7 years, and definitely, beyond 10 years, you make fantastic supernormal returns, Sakshi.
Absolutely, Shail. In fact, from the month of March to May 2023 also, this is the category of funds that has received the strongest inflows to the tune of over 5,000 odd crore rupees as per the Amphi data. And another set of data will be emerging today after the press conference from Ray Amphi to get to understand, where are the fund flows moving in. But if you could also help us understand, what are the key factors that continue to help mid-cap funds over a longer period of time to garner more, gains with respect to the blue chips?
Sakshi, it's pure and simple growth, aspirational India, and the fact that the growth is on a low base, therefore the percentage is higher.
Okay.
See, when you look at large cap companies like Pidilite, Asian Paints, the banking sector, automobile space, these are large, diversified, very well set blue chips, which grow on average between 15-17% a year when it comes to profit after tax. But a good mid cap will definitely, look at about a 22, 18 to 22, 22 to 25, sometimes 30% growth in profit. And over the long term, this number keeps on getting harmonized towards the mean, which is about 15-17%. So typically, good quality managements where the runway is pretty long, where you can see, profitability, EBITDA margin, how should I say, top line and bottom line, and especially the return on capital and the return on capital employed rising over a 5, 7, 8, 10 year period, you've got a winner on your hands. And that's the job of the fund manager in the mid cap space, to collect 30, 40, 50 such winners under a portfolio and ride the rally for 5, 7, 10 years. I'll give you a wonderful example. Over the last 10 years, the Sensex has compounded at about 13% a year. And at the same time, the mid cap index has compounded 17.2% per year over the last decade. So, if you plot this on a graph, the 4 percentage point extra return that you are getting on a mid cap index compared with the Sensex goes in a very, very long way in creating supernormal wealth. For instance, if you divide 72 by 17, which is the law of doubling, you'll realize that money doubles in a mid cap index in 4 years. Correct?
Yeah, yeah.
In the case of a Sensex fund, it will double in 5.5 years.
Huh.
So the doubling rate is quicker in a mid cap fund. The
Okay.
only downside is it's volatile, it's very, very edgy ride, but to offset all that, all you need to do is have an investment horizon of beyond 7 years to 10 years. And if you have that, your probability of making money is far higher, far better than what you do in terms of a equity diversified or a flexi cap fund. Sakshi.
Okay. So, Shail, if let's look at which are the funds that make sense to look at, also track, and maybe add to one's personal portfolios now.
So, Sakshi, I've given you a list of 4 plus 3, 7, and 10 funds. These are the ones that I was able to, I have tracked them over an extended period of time, and you can see phenomenal year to date returns that these funds have given, as also the 1 year return. The 1 year return on HDFC Mid Cap fund is an eye popping 42%.
Yeah.
Would you believe it? 100 rupees becomes 142, and the net asset value is somewhere like 130. You have Nippon India mid cap, you have Franklin Prima and Sundaram mid cap. These ones I have specifically mentioned, Sakshi. You'll see that the NAV of this fund is in three digits and five digits. These funds were launched, I'm giving an example of Franklin Prima Fund. It was launched in December 1993. I think you were in school, maybe lower KG. And from 1993, that's 7 plus 23, 30 years return. The fund has compounded at 19% per year. All that you have to do is hold. keep a wonderful sip in these portfolios, and just ride the rally. A 19% compounded return actually means that your money was doubling in 3.7 years, Sakshi. And if you
Wow.
held it for a 30-year period, I'm just saying, if you had held it for a
Multiple.
15-year period, your
Yeah.
money would have grown by about 5, 6 times. And a good sip, a good, single shot in these kind of funds has never disappointed investors, and these funds are the heart of any good portfolio,
Yes.
and they are the heart of corporate India, and they've come up with magnificent returns that you've seen. I mean, Nippon India Midcap has a net asset value of 2,681, Sakshi. It started at 10 rupees. Can you believe it?
Oh, okay. Wow. That's excellent data, Shell. So all of these funds, 30% for most of them is what I can see. HDFC Midcap definitely outperforming in the last 1 year. 42% returns coming in. So a regular SIP, simple 5,000, 10,000 rupees SIP on a monthly basis would have garnered you huge returns over the last 1 year period as well if you were invested here. But let's also talk about, the longer duration of history, maybe on a 10-year, 20-year basis as well. Any of these funds that have really outperformed on such a long basis too?
Sakshi, I would imagine one of the most underrated franchises in this space is the Sundaram AMC. And I give you an example of Sundaram Midcap.
Yeah.
Over the last 20 years, each year, the fund has compounded at the rate of 22.8%. And let me just draw out the financials of this particular fund. I have tracked this fund for the last 15 years or so, and it's come up with some fantastic numbers. If you look at the direct plan, the net asset value of this direct plan is 891 rupees. This was launched, of course, in January 2013, but the regular plan has been in action for a lot longer, where the net asset value is 830. Well, 30th July 2002, Sakshi. So exactly, we are sitting at a 21-year performance of Sundaram Midcap, and it's compounded at 23.5%. So that's, and it's not a small fund, 7,500 crores at its disposal, and some fantastic stocks in this particular portfolio. Let me just share some names that come to the immediate in front of me. So the portfolio consists of Federal Bank, Naveen Fluorine, Tube Investments of India, Freeram Finance, and Cummins India, as well as Grindwell Norton. I'm talking about the top six stocks in Sundaram Midcap, and Sakshi, would you believe it? All of them except for Naveen Fluorine International are at record highs at the moment uh, in the markets that we track on a regular basis. So these are the kind of funds which should be a core of your portfolio, and one or two mid caps funds from the list that I have mentioned should be a part of your mutual fund portfolio, which in fact should have about maximum 5 or 6 funds. So two out of those should be mid caps, and the ratio that you need to keep those mid caps happy in your portfolio, overall portfolio, should be anywhere between 15 to 25%, Sakshi. So overall portfolio of yours in mid mutual funds, if it is for 10 lakh rupees, then 2.5 lakh rupees via SIPs have to be in mid cap mutual funds. The names are in front of you. Choose wisely and ride this fantastic rally, Sakshi.
Okay, wonderful. So, Shell, could you also remind, we had initially also discussed for flexi caps and for the large and mid caps as well. You had discussed about the allocation that goes for that one. It gives a clear picture. So, 2.5 lakh rupees, you say, out of the 10 lakh rupees go to the mid caps. What really happens? Since we will, give this context again and again to all our viewers to help them design a portfolio for themselves in the long run.
Okay, that's a wonderful question, Sakshi. And of course, a recap is always very good. So let's presume that you wish to start with a mutual fund portfolio of 10 lakh rupees or 1 lakh rupees. The percentage is entirely up to you. The quantum is entirely up to you. The percentages and allocations matter. So typically, a blue chip fund, a single blue chip fund, should be anywhere between 30 to 40% of your initial corpus, which means if it's a 10 lakh rupee corpus, you should aim at about 3 to 4 lakh rupees to be in a mid cap fund, about 15 to 20% in a flexi cap fund, because the fund manager has the flexibility to not only invest across market capitalizations, but in different geographies as well. So that takes care of anywhere between 45 to 50% of your portfolio, which is a good blue chip equity diversified fund and a good flexi cap fund. Now coming to mid caps, anywhere between 20 to 15 to 25% is what your mid cap portfolio should be of the overall portfolio. Choose any two funds that you like: HDFC mid cap, SBI Magnum, Axis mid cap, Invesco mid cap. These have been phenomenal outperformers over the last decade or so, and they have really given some phenomenal returns to patient investors who've put in money via SIPs, who have ridden industry cycles, who've gone through market cycles. So those two funds, any of these two that you see on the screen, should be anywhere between 15 to 20%, 25% of your portfolio, which is 1.5 lakhs to 2.5 lakh rupees. Sakshi. SIPs is the way forward, as we've often said on our shows. Sakshi.
Okay, invest in SIPs, and now you have a clear categorization of how much allocation do you need to make to each of these categories of funds. And now, very, very importantly, for all our viewers to understand, there is a taxation aspect that you should definitely know in case you're investing in mutual funds. So, for the mid cap funds as well, what is the taxation that one should keep in mind, Shail?
Sakshi, I want to take you back to the golden era of investing in India. There was no tax at
No
one point of time
taxation.
on equity funds as well as equities. No short term, no long term. But
Wow.
all good things come to an end. Nevertheless, the taxation rates on equities and equity funds are still a lot lower than on broader businesses. It's very simple. The longer you hold, the lesser tax you pay, and the longer you hold, the better gains are uh, outside the purview of our very friendly taxman. Therefore, if you hold a mid cap fund for less than 1 year, you will pay a short term capital gains tax on the profit earned, which is 15%. Sakshi, if you hold it for a longer period of time, let's say 3 years, 4 years, 5 years, 7 years, 10 years, or even 2 years, the first 1 lakh rupee profit that you make on the sale of proceeds of a mid cap fund is free of tax.
Okay.
Beyond 1 lakh rupees, you will be paying 10% tax on the profit earned on the sale of a mid cap fund. Sakshi.
All right. So, all the questions answered right there for the mid cap funds. One more thing that I wanted to ask, say, for example, we've discussed 10 stocks, brilliant returns over there, over your YTD basis, 1 year perspective. Some of them have outperformed on a 20-year long historical basis as well. We've shared all the names with all our viewers. But in case there are viewers who have invested in mid cap funds that are outside of these names, and they do feel that their fund is not performing to the to this kind of a level. What should they do?
Sakshi, it's always best to rebalance your portfolio on a 1 year basis. And I have always seen that the moment you sell off something, that's the time it starts to run. It's a fact of life. It happens in stocks, it happens in funds, and it happens to the best of people in the markets, and it happens to near beginners. So my understanding is that firstly, do a deep study, and secondly, if you keep on sipping, which means that on a monthly basis you add 5,000 rupees, 10,000 rupees in a quality mid cap, go for starred funds, go for performances over the last 3 years, which have handsomely beaten the index and the sector average, the names that I've suggested. And God forbid your fund is outside this purview. Don't lose heart, be patient, continue with your SIP, see for a year or so. Otherwise, just switch. It's okay, Sakshi. Not everything in life works out. And that's the story with equities and funds too. You can't win them all, but you can certainly increase your percentage of winning by following a very simple SIP method and holding it for more than 7 to 10 years. If you hold it beyond 10 years, Sakshi, your fund will definitely outperform. Only the difference will be whether some fund has compounded at 22% or whether some fund has compounded at 18%. But it will definitely beat the Nifty. That's what I'm
Okay.
trying to say.
Okay, so that's a brilliant message out there for all the viewers. I hope your queries have been answered. So in case you're interested to know anything about mutual funds, this is the space that you should watch. Very, very simply, Shell decodes for us all the categories of funds right here. So do stay tuned to watch the mutual fund show on Business Today TV. Until then, many thanks for tuning in. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms as well. Until then, many thanks.
Hello everyone, you've tuned into Business Today TV and I'm Akanksha. Today we are joined by Mr. Rajesh Shukla and